if you go to buying the products, but of course, import duty is included in the product if it is imported from another country. And the cost price includes the import duty. And of course, VAT is also included in the cost price. So the consumer is paying the total amount of cost, the import duty, and the VAT. So it is passed on to the consumer. So in that way, it is not a direct tax, it is an indirect tax. That's why I have said here in the handout that the best example of direct tax is income tax. The person who earns income, he has to pay taxes himself. Nobody else is bearing the burden of taxes, but you can say that they are not paying taxes at the same rate. It is not there. They are paying taxes at different rates. It is because of the quantum of the income they are earning. Okay. We will be discussing that. That means the rates of taxes paid by different types of entities, or the rates of taxes paid by individuals. Sorry. Okay. Then we discuss, this is a general question, and sometimes you will see such a question is set in the examination. What are the principles of a good taxation system? Because every country is pursuing a taxation system. There is a particular taxation system in the country. So what would be the best taxation system? What would be a good taxation system? What would be a bad taxation system, etc.? You must know when you will qualify it to be a good taxation system, to be a bad taxation system. So if you know the structure of a good taxation system, you would be able to answer the question. So it is related to some of the canons of taxation. Canon means principle of taxation. We call it canon. And sometimes these are called maxims. So this is related to, the economist Adam Smith. He was the person who first introduced principles of a good taxation system, or canons of a good taxation system. He was a Scottish economist. So Scottish economist, he was well regarded, and he is also called the father of economics. He is also called father of capitalism. He wrote a book, An Enquiry into the Causes of Nature and Causes of Wealth of Nations. Sometimes this is called An Enquiry into the Wealth of Nations. So he okay, is it okay now? Can you hear now?
Yes, sir. Yes, sir.
Yes, sir.
Okay. So I was saying that. Okay, I was saying that the maxims or the good principles introduced by Adam Smith. He was the first person to introduce the maxims or principles, And we call him the father of economics, the father of capitalism, etc. And he wrote the book in 1776. He was a Scottish philosopher, come economist, and we follow the taxation system. It is the base of a good taxation system. Now, what are the principles? What are the canons? We have to know. First of all, canon of equality. So canon of equality, as you understand from the word equality, it means that everybody has to pay taxes at the same rate, but it is not that kind of principle. Everybody does not have to pay taxes at the same rate. That's why we said that equality does not mean that everybody has to pay taxes at the same rate. But rather, everybody pays according to his or her ability. Ability means on the basis of the quantum of income he is earning or she is earning. So this canon can be called pay as you earn. You will see a very common sentence somewhere in the taxation system, pay as you earn. That means you will be paying taxes on the basis of your earning. If you earn, you will pay. If you do not earn, you will not pay. Why? Because you don't have an income. So that's why you don't have to pay taxes. But you will find a very common word in Income Tax Ordinance 1984 or in the Income Tax Department, which is called General Exemption Limit. So, you know, General Exemption Limit? The General Exemption Limit is that up to a certain amount of money, you don't have to pay taxes on. It means that if you earn, say, 2 lakhs taka per year, gross earning, you don't have to pay taxes because it has not crossed the limit of general exemption. It is under general exemption. It has not crossed the limit. So this is called general exemption limit. If you have your income within the general exemption limit, you don't have to pay taxes. So here it is said that this theory, that is the theory of equality, this is also called equality of sacrifice theory. It is equality, but in terms of sacrifice, how much you are sacrificing from your income. In the sense that if a person earns taka 50 and pays taxes at taka 5, the rate of taxes would be 10%. And if you earn 500 taka and pay taka 50 as income tax, that is also equal to 10% of your earning. So percentage remains the same. But whether this will be equal between the two persons. That means the person who is earning taka 50 and pays as income tax, and the person who is earning taka 500 and pays taxes at taka 50, both of them are paying taxes at 10%, but whether they are making sacrifices equally or not. They are not sacrificing equally. Because when you pay taxes on your earning of taka 50, it is burdensome for you. But when you are paying taka 50 out of taka 500, although the rate is 10%, but it is not that burdensome as it is on the earlier person, as I mentioned to you. So there is a difference between the two. And that's why this is also called equality of sacrifice. And we do that. Okay. Then you come to another point, which is called canon of certainty. of certainty means tax has to be certain and arbitrary. A person should know what, when, and how he has to pay taxes. A state also should know how much it will receive from tax. So that's why there is a budget. And the government wants to know how much it will be collecting from the people, from the wage earners, or from the businessmen. So he needs to, the government needs to make the budget as per the collection it can make out of the taxes. And people should also know, people should also know when he has to pay taxes